Over the past few days, I've been experimenting with a lot of different strategies to see what works and what doesn't. And in the process of experimenting, I discovered this. It's a simple scalping strategy that works perfectly on the 1-minute time frame. It's so simple that some might even say it's stupid. And the reason why it feels stupid is because of the negative risk-to-reward ratio used by this strategy. If you didn't already know, with a negative risk-to-reward ratio, you're basically risking more money per trade than you can make. So for example, with this strategy, the risk-to-reward ratio is 2-to-1, meaning that for every $2 that we're gonna be risking, we can only make $1. Now, you may be thinking,
that is a very stupid strategy. In fact, it's a losing strategy. How can you risk $2 every time only to make $1 and expect to make money?
You see, the thing that makes this strategy super profitable is the win rate. Even though we're gonna be risking more than we're making every single time, the win rate of this strategy is so high that all the losses from individual trades are gonna be covered in the long term. Now, how does this strategy work? Well, first things first, get on TradingView and load whatever forex pair or trading security that you like. For me, I'm gonna be using the GBP JPY on the 1-minute time frame. I'm gonna be using the 1-minute time frame because this strategy produces very few trades on higher time frames like the 1-hour time frame, for example. If you're comfortable with taking only 5 to 10 trades per month, then you're welcome to use higher time frames. Now, this strategy uses a total of 5 free TradingView indicators, and we're gonna add them to the chart one by one. Click on Indicators, type in UT-Bot Alerts, and select this one by Quant Nomad. Next, type in Market Bias, and select this one by Professor X. Then type in Money Flow Index, this one by Dreams Defined. Then type in Zero Lag EMA, this one by Kivan. Lastly, type in ATR and select this one by TradingView that's under Technicals. Next, we're gonna change the settings of the indicators, starting with the UT-Bot Alerts. Click here. On the Inputs tab, change the key value to 2 and the ATR period to 5. Then on the Style tab, you're gonna uncheck these 2 bar color options and then click OK. Next, we're going to change the settings for the market bias indicator. To do that, click here. On the Inputs tab, change the period to 150 and the smoothing to 30. And then on the Style tab, we're going to uncheck this first option and then click OK. Next, double-click on the ZEMA indicator to access the settings panel. On the Inputs tab, change the period to 50. And then on the Style tab, you're going to change the plot color to whatever you want. Next, click here to modify the Money Flow Index. On the Inputs tab, change the oversold value to 40 and the overbought value to 60. Then on the Style tab, you're going to first of all change the plot color to white and then change the values for these parameters to 60, 40, 50, and 50 respectively, and then click OK. Last but not least, you're going to double-click on the ATR indicator and change the length to 5. On the Style tab, change the precision to 2 and then click OK. Now that we have all our indicators set up, the next question is, what does each one actually do? Well, I'm gonna tell you, but before that, what broker do you guys use to trade? Personally, I use hankotrade. As you can see here, this is my trading history. I mainly scalp gold, and up here you can see that it's actually a live account. The reason why I love hankotrade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is the lowest it can go. And for those of you that love high leverage, guess what? hankotrade offers up to 500x leverage. And if that's not enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500, so you'll have $1,000 to trade with. To access the bonus, as well as all the other perks, sign up to hankotrade using the link in the video description. Back to the video. Now, you may be asking yourself,
but what does each of these indicators actually do?
Well, let's start from the top. The UT-Bot Alerts is going to be giving us the final entry confirmation signals. When it says buy, we buy. When it says sell, we sell. Pretty self-explanatory. Second, the market bias indicator is going to be used for two things. First, long-term trend confirmations. When it's colored green and the price is trading above it, that indicates a bullish trend. Conversely, when it's colored red and the price is trading below it, that indicates a bearish trend. Another use for the market bias indicator is going to be pullback confirmations. I'm going to show you what that means in the next few minutes with an example. Next, we have the zero lag EMA or the Z EMA, and we're going to be using it to identify short-term trends in the market. When the price is trading above it, that indicates a short-term bullish trend. And when the price is trading below it, that indicates a short-term bearish trend. The goal of this strategy is to trade in the direction of both the long-term trend as well as the short-term trend. Next, we have the money flow index, and it's going to be used to identify overbought and oversold conditions in the market. We will be looking to take only long trades after the money flow oscillator, this white line, goes below the 40 level. This indicates that the market is oversold. When the same money flow oscillator goes above the 60 level, that indicates that the market is overbought, so we will be looking to take only short trades. Last but not least, the ATR indicator is going to be used for stop loss placement. We're going to go over that in the next few minutes with an example. Now, let's go over the conditions for entering trades. To enter a long trade, the first thing that we're going to look for is a long-term bullish trend. A long-term bullish trend happens when this trend ribbon of the market bias indicator is colored bright green. Second, the market should do a pullback because we want to enter our trade just after a pullback. But how do we confirm a pullback? Well, when the trend ribbon of the market bias indicator changes color from bright green to dark green, that is a pullback. Now, during the pullback, and when I say during the pullback, what I mean by this is the time when the trend ribbon is still colored dark green. So from here to here. This is what I mean when I say during the pullback. Okay, so during the pullback, we want the market to be oversold. That is going to be indicated by the money flow oscillator, this white line, going below the 40 level of the money flow index, which then causes a green dot to be printed, like this one. Next, after the first three conditions have been met, we then want the UT bot alerts indicator to print a buy signal, like this one. Now, after we get this buy signal, there are several conditions that need to be met on this signal candle for this buy signal to be valid. Here they are. First, the money flow oscillator, this white line, should be at the 40 level or above. Second, the value of the money flow oscillator on the previous candle, this candle right here, should be less than 60. The third condition is that the upper wick of this signal candle should be smaller than the body of the candle. Lastly, none of these candles during the pullback should close below the trend ribbon of the market bias indicator. If any of these candles happen to close below the ribbon, this entire setup becomes invalid. Now, once all the previously mentioned conditions have been met, there are two things that can happen in regard to this moving average. The first and the most obvious is this signal candle closes above the zero lag EMA. If it closes above the zero lag EMA, that would indicate that the market is in a short-term bullish trend and we're gonna enter a long trade here. The second thing that could happen is that this signal candle doesn't close above this moving average. Instead, it closes below the moving average, like right here. If this is the case, you just wait for the very next candle to close above the EMA. If the next candle closes above the zero lag EMA, you enter your long trade here. Now remember, you only have to wait for the very next candle, not the next two candles, not the next three candles, just one candle after the signal candle. The stop loss is going to be set at 3 times the ATR value of the entry candle. For the take profit, we're going to set it at 0.5 times the risk for a risk-to-reward ratio of 1 to 2. We let the trade run and take profit. For short trades, we're going to do the opposite. So the first thing that we're going to look for is a long-term bearish trend. A long-term bearish trend happens when this trend ribbon of the market bias indicator is colored bright red. Second, the market should do a pullback. But how do we confirm a pullback? Well, when the trend ribbon of the market bias indicator changes color from bright red to dark red, that is a pullback. Now, during the pullback, we want the market to be overbought. That is going to be indicated by the money flow oscillator, this white line, going above the 60 level of the money flow index, which then causes a red dot to be printed, like this one. Next, after the first three conditions have been met, we want the UT bot alerts indicator to print a sell signal, like this one. Now, after we get this sell signal, there are several conditions that need to be met on this signal candle for this signal to be valid. Here they are. First, the money flow oscillator, this white line, should be at the 60 level or below. Second, the value of the money flow oscillator on the previous candle, this candle right here, should be greater than 40. The third condition is that the lower wick of this signal candle should be smaller than the body of the candle. Lastly, none of these candles during the pullback should close above the trend ribbon of the market bias indicator. If any of these candles happens to close above this ribbon, this entire setup becomes invalid. Last but not least, we want the trigger candle or the signal candle, this candle right here, to close below the zero lag EMA. If it doesn't close below the EMA, but the very next candle happens to close below the EMA, we will still enter the trade as long as all the other conditions are still met. All our entry conditions are met on this candle, so we're going to enter a short trade here. The stop loss is going to be set at 3 times the ATR value of the entry candle. For the take profit, we're going to set it at 0.5 times the risk. We let the trade run and take profit. Now remember to do your own extensive backtesting and forward testing to see how powerful this strategy can be when trading with your real money. That's been it for this video. Hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching, and I'll see you guys next time.